Lal Oswal Studio.
You're going to see a lot more. You're going to see so much secondary sanctions.
Most of the Asian screen is showing a tinge of green, and most of the other markets as well.
24,450, 24,500 first support is very near term.
We would expect potential disruptions, especially essential medicines that are highly competitive and on thin margins.
50% tariff, most of the retailers won't be able to absorb or have any mitigation.
1/3% lower on the Sensex. The Nifty, I think, is starting lower by about that much.
I do expect that second half will be better.
It's very difficult for any industry to mitigate a 50% tariff.
Purchase of Russian oil, according to sources, is perhaps not the only reason why India is being penalized.
It's a 150-point downtick on the Nifty currently. It's below that 24,450 mark as we speak.
For Bajaj, I can tell you in a word that we are quite unconcerned.
अपने किसानों का हित सर्वोच्च प्राथमिकता है.
Red-looking screen, the mid-cap and small-cap indexes are bearing the brunt of even more intense selling pressure, especially in the last hour.
Well, the last hour coming up, and it's been such a volatile session. We started off flat, then the markets fell all the way down to 24,350. But look at that intraday chart in the last 1 hour. There has been a recovery, and quite a stunning recovery. 100 points off the lows on the Nifty, 500 points off the lows on the mid-cap index. We're still down about 0.5%, but definitely off the lows. Hi, guys.
Hi, guys. On any other given day, you would have said, how does it matter? It's 100 points, 120 points. But the reason it matters is the range, the levels. And we've been precariously close to breaking a lot of, significant supports. The market's been dealing with the blow. It's down. But with this recovery, should we say, it's not out. Hi, guys.
Hi, and by the way, we're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Rima, with me, Surbhi and Nigel. Hi.
Well, hi, guys. So, it's going to be a volatile last 60 minutes or so.
It's also the expiry, right?
Yeah, it's 24,450. We'll either be 100 points higher or 100 points lower from here. I think just going by the moves that we've seen. Let's see how that goes. But we won't be at 24,450. Big move, big recovery, both on the Nifty as well as on the Nifty Bank. And the breadth of the market at least has improved. From around 400 stocks, we're up at around 800 stocks or thereabouts. The recovery continues, in fact. Let's see whether or not we could be 100 points higher from 24,450. It's a bounce in a market that structure has already got punctured. But we'll have to see whether or not we want to test higher levels.
That's inspiring, but let's see. It could be just some shorts that are covering. And that's fine. I mean, short covering bounces are also welcome. All bounces are welcome, right? Just to quickly put things in context, I just want to start with who is saying what. Because there's so much news flow over the last 24 hours, and there's been plenty of leaders speak even today since the time we opened out. So let's take it step by step. Now, the first and foremost important statement came in from Prime Minister Modi. He's made it very clear that India is not backing down from the interests of farmers and from our fishermen as well as dairy farmers. So that was point number one. And actually, once that statement was made, it was fairly early in the morning. That's when the market started looking at a gradual collapse, because it seemed very clear that those who were expecting a very quick breakthrough in negotiations and a quick rewind back of tariffs below 25%, maybe it's not that quick. Maybe it'll take some more time, some more push and pull. So that was statement number one. The next one was this. This is an AFP report, which is saying that Ukrainian President Zelensky, he's now saying he's ready to meet Vladimir Putin face to face. Now, important to keep this in mind. All of these are very fast-moving geopolitical pieces. The third statement came in from the Kremlin itself. The Kremlin has confirmed that indeed there is going to be a Trump-Putin meeting. This could be as early as the next couple of days, and they'll come out with the exact venue and location in a while. But this could be an important breakthrough, because as we know, if there is a breakthrough on the Russia-Ukraine war, then maybe that additional 25% penalty on us, at least that sword perhaps could be removed. Now, why is the market jittery? Why has the market taken this on its chin? One, because the technical factors have come into play. We're at virtually 3-month lows. The Nifty was last at these levels back in the middle of May, the 12th of May to be precise. This 24,500, it did not hold today. The Nifty simply easily has sliced through a lot of those, critical support zones. So now there's a fight back that's underway. And the biggest concern for the market right now Forget the GDP impact and the trade and the issues about what's happening with, textiles or gems and jewelry. It's about FPI selling. Is India going to be, say, designated as a riskier market because of these tariff issues, because of the India-US relationship or not? Will that spur more FII outflows? We've already seen outflows in July. Will it accentuate as we go forward? That seems to be the big concern. But guys, hey, we always keep faith in the domestic story, right? It's the domestic funds, domestic investors, a lot of us, you, me, and we've kept the flag flying high through a lot of the turbulent patches.
Indeed.
Oh, indeed. I'm just happy with the bounce because I thought when I start the show, we will say that the 1 year return on the Nifty has been completely wiped out. But now the 1 year return is about 0.6% on the Nifty. It's still nothing to boast about, but at least we're not in the red. The mid-cap is still down 1% in the last 1 year. Small cap's down 5%. Banks have done well. That's up nearly about 10%. And generally, money chases return. So when the returns start to falter, you will have people questioning that is this the place to park my money? And which is why trailing returns are always, important, and they are an indicator of how money, and the mindset around money tends to move. The Nifty, by the way, is about 7% off its high. Global markets are broadly in the green. In Asia, you had Nikkei up close to about 0.65%, Korean markets up nearly 1%, Hang Seng gaining about 0.7%, and Europe too. The last time I checked, broadly higher. The Dow futures is up close to about 100 points.
Okay, all right. Well, let's tell you what we have on the show. The market staged a strong recovery after a weak early trade as Trump announced that 50% tariff on India. The Nifty bounces back from its lowest levels since 12th of May. Even as Trump's tariffs shock hits, the rupee remains resilient though. Lata will join soon to tell us the math. We also spoke to the management of Pearl Global, Bharat Forge and Lupin earlier. We also got your views from the sector to be hit hard by tariffs, which come into effect from the 27th of August. Well, how do you position yourself though in the final hour of trade? Mitesh is back with us. Mitesh, some part of that short covering bounce has taken place. Reliance Industries has come off the lows. The Nifty Bank as well is fighting back. And actually the IT index, that's been resilient for most of the trading session. What do you think? Do you think, that 100 EMA has got protected and maybe in fact we do end higher from here? How would you retrade?
Maybe a couple of things. Yes, there's a good bounce back, and it was also looking at, coming as a result of extremely oversold levels on the hourly and the 2 hourly charts in the Nifty. Reversal would happen in case you can get some upper levels being captured. So on the back Nifty, we can get past 24,550 again and start trading above. And I think once this happens, then I think I'll be more comfortable taking long positions. But for the time being, what I would advise is that people who have been, having or carrying some short positions of bullish or bear spreads, I think good time to take profits on them and wait it out. I think on the upside, I've indicated levels beyond which some kind of a reversal or a stronger bounce back would happen. And that's how we'll work it out. On the stock side, I have a buy on Maruti. Keep the stop below levels of 12,450. Look for targets of around 12,700 to begin with. I suspect 12,820 is what can also happen. And the other one is a buy on Blue Star with a stop just below levels of 1795 for targets of 1885.
Okay, let's get a handle on the futures and options space. So much is changing. There's so much volatility in the market. Mangalam joins in with what he's reading from the screen. Mangalam.
Well, in the morning, we expected that at some point there would be a bounce that would come by in the market. For most part of the day, the street wasn't obliging the bulls. And now as we look at it, as we move towards the business hour of expiry, there has been a sharp recovery from lows. If you look at the frontline indices, the Nifty Bank, as well as, the mid-cap index, there has been a recovery. Are we, still out of the danger? Perhaps not. But, at the same time, we've seen important recovery from important crucial levels as well. The India VIX, that has become a lot more benign as soon as we moved higher, so that's a positive. And the Nifty has conquered the 24,452 mark. And why is this important? Because this is the 100-day moving average. Remember, we've been straddling between the range at 100-day moving average at the lower level and the 20-day moving average at the upper level itself. And now as we speak, the 24,500 call writers are back in action. Remember, they had been writing a lot of these calls earlier. If the market continues to stay higher and move higher, then these call writers will have to cover their positions, and that may further fuel an up move that we see in the last hour of trade. 24,400 call writers as well. They had gotten very active as the market at one point moved below the 24,400 mark. Will they start covering their positions or not is something that we will watch as well. On the other side, as these call writers will, feel a little jittery, put writers have come into action now. So it's 24,400 put and the 24,500 put. Both of them telling you that today's low and the important support of around the 24,350 to 24,400 mark stays crucial, and that's what the bulls are hoping for. The recovery should sustain as we move to expiry. The put call ratio, which at one point was 0.067, has now moved back to 0.85, telling you there is a bit of a tug of war between bulls and bears, and now this recovery goes to the bulls. And the advanced decline as well. Yes, more number of stocks declining, way more number of stocks declining than the number of stocks which are advancing, but those lines are coming slightly closer over the last 5 or 10 minutes. Just keep an eye out on the IT index. That's the heavyweight that is actually, taking the frontline indices higher. So the IT index comes up for you on the screen. The intraday chart would tell you the story of how the Nifty's up move and the IT index's up move have been fairly congruent. And finally, a couple of stocks where writers have been caught on the wrong side. We have, Blue Star as well as Hero MotoCorp. Both these stocks are higher on account of short covering. Godrej Consumer reports its numbers, perhaps post-market today. Ahead of that, a lot of long positions being added. And just watch out for RBL Bank. The overall open interest is closer to 92% of the market-wide position limits. If it does cross that 95% mark by close, maybe the stock goes into F&O ban.
Okay, all right, got that point. Mangalam, thank you very much for that. Important to know that, I was just looking at, even from the peak, end July, 24th July was the session. From that point onwards, the Nifty lost a good 750 points. Yeah. There was a long short side to play on.
Yeah.
Maybe some of those shorts are kind of covering now.
I'll tell you what, everyone's waiting for the bounce. I was, when we were talking the flow as well earlier today, is this market needs to stop falling. Because what is happening now is short positions are making money. Yeah. When the short positions don't get follow through, that's when the panic starts. The problem is now it's become such an easy trade, right? People are coming there, they're adding shorts, the market is falling. You're writing calls, you're making money. Now suddenly, this is making you think, because we've seen a bit of a bounce. If you can sustain this, stop falling is the first thing. Hold on to your ground, and then in fact, you continue. So I think that's the important point. Just one more point, Rima just made that point about the European market sitting in the green. Yeah. The Russian market is up 5%.
Deal.
Yeah, there's hope that there can something can come about with regard to Ukraine, Russia. So the Russian market, in fact, is the big outperformer today. So we had those indicators, and one of the key indicators is that the India VIX has not spiked up in spite of seeing that correction is in the red, with the Nifty down close to around 80-90 points or thereabouts. Sudeep Bandyopadhyay, Group Chairman, IndiTrade Capital, joins us on the show. Hi, Sudeep. I'm going to throw the floor open to you first. Give us a stock that in this sort of a market that is choppy, you would look to buy. Because when the markets are going gung-ho, you have to buy the stock on the screen, and sometimes it runs away. And then you can't determine the price. When markets get jittery, actually you get the stocks you want at your price. Which one would that be?
Well, I've been bullish on L&T, and I strongly believe that all this Trump and tariff-related shenanigans have nothing to do with Larsen. We should go and buy Larsen. It's a great stock for somebody's portfolio, and nothing changes as far as L&T is concerned because of what all is happening around us. The other stock I'm going ahead and also naming a cement stock, which is Ultratech. I've been bullish on this as well for quite some time. Again, my belief is the same, that nothing changes around Ultratech because of what is happening around us. So go and buy, take this opportunity to accumulate both Larsen as well as Ultratech.
Okay, all right, got that. Ultratech is a stock that Sudeep is going with. Stay on, Sudeep. Let's address some more stocks actually in the sea of green. One stock that's held out to, in the sea of red, I should say. One stock that's held out to the green right from the morning is actually Hero MotoCorp. Hero Moto is up about 4% season. Tell us more, Sudarshan.
So Hero MotoCorp is top Nifty gainer. Company announced its Q1 earnings yesterday, and earnings were in line to slightly miss to our estimates. But the major move in the stock price we have started seeing post 10:30 a.m. when company held the analyst call. And some of the takeaways that have come from the earnings call. First, on the margin front, the guidance on the margin is 14 to 16%, but company is saying that in near term, margin is expected to be in the lower band of the guidance, so it would be around 14 to 14.5%. Now, talking about the growth, for the domestic industry, company is saying that it will maintain growth in the range of 6 to 7%. So that's good. Second, better part is on the export front, where company is expecting growth to be over 40%. So it will be taken positively. Third part is the market share. company is saying that as per Vahan data, that is the retail market share, it's holding on to the market, overall market share around 31%. And in the entry-level segment where company is the market leader, there also it's holding on to the market share in the range of 66 to 67%. One concern that industry has been pointing out was financial penetration. In Q1 for Hero MotoCorp, financial penetration had moved lower, but company has termed that as seasonal impact, and it's saying that in July it's back to the levels around 65%, which is very normal for the company. And last part, why the major move that you are seeing in the share price? Normally, whenever any company announces launches, it's being seen that companies expecting a strong demand. That's the reason it's coming out with launches. Now in Q2 FY26, in 25cc segment, companies announcing 2 launches, and that will be launched in Q2. And another launch that company is making in the partnership with Harley-Davidson, and that launch will also happen in Q2. So because of the launch, you are seeing a big move in the share price.
Okay, so very quickly, that's Hero, and Hero, everything is going right. You also heard today commentary from Mr. Rajiv Bajaj Auto, because Bajaj Auto has kind of missed the sweet spot with investors for several quarters now. Quickly run us through them if you found any headlines there, and then we'll play out the bites.
So first, earnings for Bajaj Auto, I'll say if you compare with Hero, earnings are better than Hero MotoCorp for Bajaj Auto. Now, especially on the margin front, company has reported margin below 20% after several quarters. And that was majorly because of Forex. Now company is saying that rupee has depreciated sharply against dollar in the last 1 to 2 months, and that will help margin coming back above 20%. Now, major highlights that come from Rajiv Bajaj's interview. First, there was a concern regarding the EV production. Now, he's saying that because of the LRV supply that he's getting, he's saying that he was anticipating that production might be impacted. But if the current supplies continue, for FY26, the production might be the same what company had anticipated at the beginning of the year. So positive part on that front. Also, there are some launches coming from Bajaj Auto also around 150cc segment. That will be also taken positively. And on export front, Rajiv Bajaj is saying that peak that company had seen was of 2 lakh units. Now currently around it's 1.40 lakh units, but he's saying that very soon company is expecting that export will hit 2 lakh units. That is the biggest positive that has come out from Rajiv Bajaj's interview.
Post-COVID, once our export markets started recovering, particularly in Africa and LATAM, exports came back to a level of about 140,000 a month compared to about 200,000 a month pre-COVID. And as you may have seen, in recent months, they have come now nicely to a level of 180,000 a month with an all-round secular recovery, and particularly so in LATAM, which we are very happy about because, again, with Pulsars and Dominars, it's a very rewarding market for us. And I'm actually quite hopeful that, if this trend continues, it may not be long before we are back to that level of 200,000 a month. The immediate solution that seems to be working for us now is to get low rare earth, or LRE as it is called, magnets from China. That has started up. The next step would be to try and source LRE from elsewhere, because what if China bans LRE tomorrow? Then you're back to square one. The availability of LRE, we are now looking at least a 50% availability as far as the Chetak is concerned in this month, in August, and perhaps about 70% as far as the Gogo is concerned. I will actually say that we think we can now do better than we had even planned for the whole year, because by October, production should completely normalize. We should have made up for what we will lose, what we have lost in July and what we will lose in August. We are starting production as we speak. I believe we will go to market in the first 4 markets on 10th of August under the brand Riki, R-I-K-I. So that's going to be our brand for the e-rickshaw segment. As far as motorcycles are concerned, this is not something that we have talked about so far, but I'm happy to share a first information on this, that this is a segment where, it's a bit between the Chetak and the three-wheeler. It's not that we are not in the ICE motorcycle, but we are not exactly the market leader or overwhelmingly the market leader. So what we're going to do here is, I think we are going to work with two of our strongest brands, the Boxer in export markets and the Pulsar, the world over, quite frankly, is a very, very strong brand. We're going to work with these two brands, and hopefully in the near future, we'll have something on that front, i.e. on the electric motorcycle as well.
That was Bajaj Auto. By the way, don't lose sight of the market. The expiry factor seems to be at play much earlier than 3 o'clock because the up move continues. The cut is in between. It was just about 50 points. Nifty was barely 50 points lower. There's a dramatic recovery from the lows that we have seen. Let's see. I mean, if it gets us to a close at the highest point, close to the flat line, it will be. The bulls will absolutely take that. But very quickly, Sudeep, to go back, that's the sharp recovery that we're tracking. But Sudeep, quickly.
Well, I think if I have to pick one, I'll go for Hero right now. I mean, I also like Bajaj, but if I have to pick one, Hero, on the basis of the fact that I think there is a rural recovery definitely underway, and that will not get affected by all these, trade-related, tariff-related challenges. And that definitely gives Hero a big leg up. They have great penetration in rural India. The vehicles are rightly positioned there, and I'm sure they will benefit out of that. And the initial signs of that are already visible. The second point is, they were not in a big way in the export market. Now they are talking and, penetrating export market in a big way. Again, that should give them a leg up going forward. Valuation and everything considered, one stock, if I have to pick, it will be Hero. If I'm given a chance, I'll keep Bajaj as well.
Okay, all right. I just want to make a quick point. In the last few minutes, actually, we've got a few numbers that looked quite good. If I look at, just pull up rate gain, the deal wins or there are looking quite good. Rima can, weigh in a little bit out there. But that's a good set of numbers that we're seeing. They're sitting on a good amount of cash balance as well. The street likes it. The other one I'm looking at is Savita Oil. Another one where we've seen a big underperformance, but those numbers look pretty good. And that's why, in fact, they're bouncing back after a while. So that stock as well from the broader markets has seen a positive reaction. And Kilburn as well, that's the other one in there where you're seeing good growth on the top line, you're seeing margin expansion as well. That stock as well is moving up. So it's not just the frontline names, but there are stocks in the broader markets. All these three have come out with this set of numbers in the last 40 to around 50 minutes. And all.
So revenue growth is 5%. Yeah. That is lower than the company's guidance for this year, which is 6 to 8%. Margins have fallen by 500 basis points quarter on quarter, but at 18.2%, it's still ahead of the guidance for this year. So the company had spoken about weaker margins in FY26, 15 to 17%. But as Nigel pointed out, what the street likes is the deal wins, because deal wins for the last 4 quarters was in a band of 60 to 65. And this quarter, it's come in at about 81. So that is the number the street likes, which is what you are seeing a bit of a reaction. That said, on the revenue, it's still things a bit slow, 5% revenue growth. Margins have contracted, but above the company's guidance. But you spoke about some companies where the numbers are good. But on the flip side, look at Igarashi Motors. It's a small company, but stock has tanked close to about 11% post the numbers. I think profits here declined by close to about 70%. Hikal is the other one, 6% lower. Mcure Pharma, Edelweiss Finance. These are some of subdued setup.
What about the new listing? NSDL. It ended yesterday, with a gain of what?
It was about 918 or 910 by close.
NSDL, right? I think we should pull up the intraday chart out there. Today, it's seen actually some follow-through buying that should come up for you on the screen. BSE listed. I think it's up
20% up now.
Absolutely. Just take a look at that. So the issue was priced quite attractively. The initial day pop wasn't as much as what the street expected, but in a weak market, that one has closed. It's pending buy orders on that one. At some point of time, we should get it up for you on the screen. And as we said earlier, the Nifty Bank has now moved into the green. The Nifty Midcap Index, apologies for that. And the Nifty is nearly 100 points higher from the time we started off the show, which is all of 20 minutes or so ago. I'll tell you what, we'll slip into a short break. On the other side, we'll focus on the rupee and how the currency as well is doing in light of the tariff threat. Stay with us.
Welcome back. So the equity market continues to put a fight back thanks to the fact that it's Thursday, so weekly expiry is playing out. Let's find out what's happening with the rupee market and the bond market actually as well. How have the money markets received this gift of 50% tariff from the US of A? Lata is here with the details. Lata?
Well, in the equity markets, it fought back. There never was a fight in the rupee market, which is the surprise. The currency has been fairly stable. It's all of a 9 pice movement, 87.67 to 87.76 was all that the currency has moved. Extremely ranged. The trader chatter is that Reserve Bank was there at the beginning, and it again showed its face when it went to 87.76. That's the high of the day for the dollar. But it wasn't as if there was so much of a hungry demand for dollars that, that rocked the market. One would expect that with such a big tariff announcement. The market probably believes, again, like a taco trade, that something will happen within the 21 days. And so you don't need to come and burn your fingers. Also, there is a lot of expectation that the upcoming meeting with Putin might, lead to some kind of a outcome which may postpone or completely do away with these tariff threats. The other point in favor of the currency is that it has already fallen. The rupee has been the worst performing currency. All of July, it's fallen by over 2%. When we started in July, it was like 85.6 or something. So, it's traveled a goodish bit. Therefore, the bad news is in the price, according to some of the traders. If it definitely does, pan out to be much worse, then it will cross 88. Otherwise, 88 is a fairly important resistance for the dollar. It won't be able to cross beyond that. There is, of course, a hit to the calculations about the hit to the current account deficit are there. About 0.2% current account deficit can rise if this 50% persists for a bit. GDP can take a hit of 0.5% if it persists. But everything is if it persists. That's not at the moment the bottom line, the base case belief of the market.
Got that. Thank you very much for that. Ajay Tyagi, Head of Equity at UTI Asset Management, is now joining us on the show. Ajay, thank you very much for joining in. Well, you've had nearly 20 hours to digest the news we've been hit with. So what is your approach? I mean, what's the advice that you're giving to manage money at UTI Asset Management?
Yeah, good afternoon, Rima. So, this tariff tantrum has been playing on since February of this year, and there has been a lot of back and forth that we have seen. And I would right now only recommend that we have to wait it out. We don't know whether this is the final number that would be applicable to India or there would be a give and take over the next 2-3 weeks. So as of now, we're not moved by what's happened yesterday. It does appear to be posturing by the US administration. So we will just hold on and not act right now.
All right. Hi, Ajay. Good afternoon. Good to see you, Ben. But, there'll be various pockets as well that, will not be impacted by this entire global uncertainty. Would you look inward? Will there be a couple of sectors? You have Page Industries that have come out with a set of numbers. The numbers look pretty okay, but they are guiding for better times ahead. They are confident that demand will recover. And September onwards, we see a recovery. Would you be in that camp? And if yes, what will you look to buy? Discretionary has been top of mind. Would you be in that camp?
I think that's a great question. Let me just start by saying that we don't know what the final tariff number would be. But the fact is that there would be some impact to our exports. We would also have to see what is the tariff of some of the other competing nations in different sectors. And therefore, what's our competitive advantage post all of this playing out in the next few months. So that's going to be very, very speculative right now to comment. But I absolutely agree to your point of view that what's fairly insulated right now is domestic consumption, both discretionary as well as staples and durables. And by the way, there are a few pointers in favor of the consumption sector, the overall consumption sector that is. We, of course, started the year with a tax break by the government. That obviously has improved the disposable income for households. We are also looking at basically the pay commission coming in sometime next year. The payouts for that would obviously be some time away, maybe the next few quarters. But look, most of the things get discounted into the markets much before the D-Day. So pay commission obviously would lead to a big booster for households in India. So that will also be at the margin positive for consumption. Last but not the least, we've seen a fair bit of demand destruction in the last few years. most parts of consumption are looking at a cyclical low right now. Our conjecture is from the cyclical low, we only have one way to go, which is up. So a confluence of all of these factors does make us more constructive on the consumption part of the markets. Yeah.
Okay. Ajay, hi, good afternoon. Great to have you on. Where are you placed on sectors like pharma and chemicals specifically? Because a lot of people had started positioning for a turnaround, a final, recovery in the chemical cycle. And likewise, pharma was proving to be a great safe haven up until 2-3 weeks back, when the headlines against pharma and pharma tariffs, that rhetoric really started to grow. So where are you on these two sectors?
Yeah. So see, if I break up pharma into exports and domestic formulations, then very clearly the domestic formulation piece is again insulated. Like we discussed the domestic consumption a while back, I would say domestic formulations within the pharma space is fairly insulated, has its own drivers, increase in per capita income, increasing medical, going to be a propellant for higher demand in the coming years. The stress and the speculative part, I should use that word, is pharma exports into the US. And that's where we just don't know. There are days when we hear about an obnoxious 250% kind of tariffs that could be imposed on the exports of pharma into the US. So we just don't know how it plays out. So that would be, again, wait and watch. Look, as of now, we can only say that whatever increases the price of healthcare in the US may not be so easy to pull off by the US administration. And, the pharmaceutical plants don't come up overnight. There is a wait period of a few years before new plants can be erected in the US. Then, an FDA inspection happens, and then they start supplying drugs to, the local markets there. So, yeah, I mean, again, wait and watch, although I'm not too sure whether the kind of tariffs that have been doing the rounds are really plausible. You also spoke about chemicals. I think once again, we'll have to break it up into two parts. I think inventory correction should be behind us. We should be seeing much better days for chemical demand in general. This is where we have to look at India's competitive advantage against some of the other chemical exporters, and that will be clear only once we see the dust settle down on what are the final tariffs for different countries. So here again, slightly speculative at this juncture. Yeah.
More headlines coming in where politics is mixing with the economy. I think Russian President Vladimir Putin is planning to visit India. We'll get that flash up for you on your screen. Ajay, what about oil and gas, the entire energy complex? How should one go about thinking? You right now don't even know at what, where we will be procuring crude from. Is it going to be at the current Russian levels? Is it going to be higher? So in that context, what is the view on the individual constituents which make the oil and gas complex?
This is again a question where there are multiple parts. Let's just simplify it. Of course, there is this element of what India finally does, because procuring oil from Russia is in the eye of the storm. Maybe India will have to, at least optically, try to reduce imports from Russia so that we don't, look like a, economy which is very belligerent and not, giving into what the pressure from the other G8 countries is. While that's one part of the story, the other thing is, look, oil and gas is a fairly regulated sector. Even without the noise around import from Russia, the fact is that the government can come up with its own ways of pricing. The government can increase, decrease excise duties. All of this have an impact on the GRMs of the oil refiners. And of course, to an extent, they also have an impact on basically the marketing margin. So I would say, it's very unclear for us how the government will behave over the next few quarters. If there is one takeaway from whatever has happened, it is that maybe oil prices globally go up, to that extent benefiting upstream companies. But do remember, even for upstream companies, beyond a point, there is a windfall tax that was put in 2022, if I'm not wrong, and went on to 2023. So, this is where there is always going to be some bit of regulatory intervention. So a lot of moving parts here. Not very, very clear in terms of outcomes over the next 1 year.
Okay, all right. Ajay, got it. Well, we'll leave it on that note, and we have to see the screen. Look at the Nifty go. What a pullback, what a recovery. It's been a rocket since 2 o'clock, actually, and that rocket has shot back into positive territory. And I think politics does dictate market sentiment, and it's very, very clear. As soon as those announcements hit the screen about a meeting between Putin and Trump, about Zelensky being ready to have a face-to-face meeting with the Russian president as well, suddenly those shorts were scrambling for cover, because if there is a breakthrough on the Ukraine war, then so much can change. That 25% additional tariff can perhaps go away instantaneously, and that's giving people hope and triggering that short covering bounce. We also have, I think, Nimesh joining in. And Nigel, have a point to make? And let's bring in Nimesh as well.
Yeah.
Great time to get the chatter.
No, let's go to Nimesh, actually, and hear out. Nimesh, the long-awaited short covering bounce, it seems to have come about. Call writing was getting too easy. Shorts in the system. PCR went down to sub 0.7. The bulls will be happy to see some green. Tell us more, Nimesh.
Oh, absolutely, Nigel. It looks like it's a powerful short covering rally. Because even from a flow perspective, it's still negative is what my sense is. So this whole rally or a recovery in the last 1 hour of trade looks like it's a powerful short covering rally, and we've seen it across the board, right? All the short stocks are seeing a bit of a recovery in today's market. I guess it's a global news which is having a center stage now, and that's adding to the volatility. As Surbhi pointed out, there are reports about Trump meeting the Russian president and Zelensky. That actually led to a bit of a short squeeze in the Indian markets as well. And also from a technical point of view, I've been highlighting, and today looks like Nifty has respected that very crucial support of 24,450 on the downside, and we've seen a recovery from there. But as you rightly pointed out, the PCR close to was 0.74. That has now sharply moved to 0.9, if I'm not wrong. And even as we all know that the short in the systems are quite high from an FI perspective. So it looks like it's a very sharp and an aggressive short covering rally in the Indian markets, at least in the last 1 hour of trade. Can it sustain? It depends upon global news and what comes up. But again, from a flow perspective, it's negative. But looks like this is a short covering rally in the last 1 hour of trade.
So tomorrow is going to be crucial, how we behave on Friday. But what about stocks? Nimesh, what have you picked up?
Well, so the first stock on my list is Canara Bank. That's been, the stock has been consolidating. Yesterday, there was a large block and very high delivery been marked as well. I understand a leading long-only fund has completely sold out of Canara Bank, and yesterday some P-note investors bought into Canara Bank. So that's the color as far as the large block of yesterday's large block in Canara Bank was concerned. So that's the first stock. The second stock is Edelweiss. The stock has been consolidating. The earnings got reported today, and now there could be a large block deal very soon. So there are two sets of investors who could be potential sellers. There is one global fund who could sell stake, and also some the Edelweiss Trust could be a seller as well in a block in the days to come. So expect some large block deals in Edelweiss soon. And the last is Affordable Robotic, a small company we don't talk too much about, but in a weak market that's been buzzing in trade today up 5%. And the sense is that maybe there is a fundraising lined up by preferential very soon in that company. So that's the reason why even that stock is buzzing in trade today.
Okay, all right. It's all moving, and we'll try and get you more inputs on that all-important flash that played out. I think we have to get it confirmed with the independent sources as well on a potential visit of Russian President Putin to India. But let's wait by for that and see if we can get more confirmation and clarity on that piece of news. But global politics is making short scramble all over the place. Thank you for that, Nimesh. Thanks very much.
We should just get Surbhi on the screen with the Nifty Bank, as well as the Nifty Bank, and pull up the Midcap index. Surbhi is the only red on the screen. Everything else is green. Surbhi, you have been left alone.
I'm perfectly fine with that. I'm perfectly fine. Always good to, get that contrast going. But this is dramatic. It's drama on D Street, as you'd call it. And I guess, a lot has happened because of these announcements. Because otherwise, the shorts were getting so brave. People were calling for lower levels.
Getting overconfident. When you write calls at will, when you're shorting the index at will, the PCR as well had moved to oversold levels, and the India VIX didn't go up. That is the big indicator. The India VIX, even after this correction, is still down. But as I said, the only red on the screen for the time being, Surbhi Upadhyay.
Happy to be alone on this one. No problem whatsoever. Okay, let's just see what's moving. We're talking about the short covering. Let's also track stocks, which are taking things higher. So it's pretty much across the board. Hero Motor, of course, has been up and about in any case, but names like Bajaj Auto have moved up. L&T has seen a sharp move in the last, couple of sort of sessions, minutes as well. ITC is bounced in positive. Anyway, tech, there was always some buying because of the fact that globally it's a bit of a situation of a safe haven. IT index is now at the highs of the session, so plenty moving on the screen. I think we can go to Hormuz as well now. Okay, after the break. Hormuz coming up with more buzzers, but in just a bit after the break. Welcome back. Since politics and geopolitics is moving the markets, here's the latest. I think we have a statement coming in from NSA Ajit Doval, who has just met the Russian Security Council secretary and saying that he's been quite excited and delighted to learn about Russian President Vladimir Putin's visit to India. So I think that's how we're getting the confirmation that Mr. Putin is coming to India. Let's listen in.
We have got a very special relationship, a long relationship, and we highly value our strategic partnership. We have had high-level engagements, and these high-level engagements have contributed very substantially. We are very excited and delighted to learn about the visit of His Excellency, the President of Russia, President Putin, to India. I think that the dates are almost finalized now. The more important thing is this, that is, these summit meetings have always been the watershed points.
Well, that seems to be the confirmation. We'll wait by for more details on the dates. For now, let's track the markets. Nifty above 24,600. Lots of stocks are moving. Hormus puts the spotlight on it.
Growing up in an era of K-dramas, we'll now have possibly dramas from A to Z at this pace. But there are a lot of movers on the broader markets. So by this time, I guess almost all of them would have turned the tide. We talk about GPT Healthcare first up. At least on last count, the stock was down around 12%. Yeah, there you can see this recovery from the lows of the day. Still 9.5% lower though. And at this pace, the stock has now slipped below its IPO price of 180. And now it has had almost 20 lakh shares traded compared to a 20-day average of around 5 lakh shares. Now, Forgings is the other underperformer. Now, it is down in 6 out of the last 7 sessions, still around 7.5% lower. Holding on to those days' lows is the stock. And 3 lakh shares have been traded today. There's a 20-day average of around 35,000. And this is not the only time that the stock has declined. It's down already 35% this year, making it the worst calendar year the stock has had since 2019. Now, Prince Pipes is the other earnings underperformer today, 9% lower on the stock. And it has also declined in 5 out of the last 6 trading sessions. But look at the volumes here. 9 lakh shares have been traded today, and compared to a 20-day average of just around 1.1 lakh. And it's been an underperformer over the last 2 years now. It's down 30% so far, and it was down 40% last year as well. Now, the volumes bit was actually reserved for Lincoln Pharma, and that is the biggest single-day gain that the stock has seen since February this year. And it has already seen close to 9 lakh shares traded here as well. But here the 20-day average is only 20,000 shares. So not a very significantly traded stock, but look at the volumes today and 11% higher on that stock. It's already down 28% this year after having doubled over a period of 2023 and 2024. And lastly, Rain Industries, that too on the positive side, the biggest single day gain since December of last year. We've already had close to 4 crore shares traded on the stock today and a 20-day average of just around 8.5 lakh. But despite this move, over the last 3 years, the stock has returned a big zero to its shareholders. Back to you guys.
Okay, all right. Thanks a lot for that, Hormuz. So, well, let's hop across to Mitesh Thakkar, who joins us for a couple of buy or sell trades. Mitesh, before we get to your stock trades, what would you advise someone? Does this have more in store? Because this is the first real signs of a short covering. I look forward to the data in the evening. It could be expiry related, but my guess is there will be some shorts that got trapped on the wrong side. Ride it for a little bit more?
No, I think, as I said, getting past 24,550 means that this bounce back should get stronger. Given the fact that we are doing this in the last half year, means that the closing is likely to be above that. So I think I would be, as I advised earlier as well, exit shorts. If you are not going long on the index, at least on the stock side, take long positions. I have BTST on Indian Bank with a stop at 642 for targets of 659. And the other one is Cummins India, which is also a stock trading at a fresh high and days high. So BTST here with the stop below 36.47 for targets of around 3,700.
Okay. All right. Got that, Mitesh. Thank you very much for being with us and giving us all that trading advice. See you again tomorrow. For now, let's move on and address, of course, the tough geopolitics and negotiations playing out between India and the United States. US President Trump has doubled, of course, as we know, the tariffs on India to 50%. But could further negotiations still be on the cards? What's happening with the back channels? Let's go across to Parikshit with the latest. Parikshit.
CNBC-TV18 has learned from sources that while India considers the imposition of penalty to be unfortunate, the focus will now shift to negotiations and back-channel talks to find a way out. The actual date of imposition of this penalty is after 21 days, and sources say this is being seen as giving space to negotiations to find a way around the additional tariffs. India will try to negotiate a solution in the next 21 days within the larger ambit of the bilateral trade agreement. India hopes to work towards finding a solution which is a mutual win-win for both sides. Sources adding that it is important to take a long-term view of the larger India-US partnership which has been built over decades. Also, the purchase of Russian crude is not being seen as the only reason by India for US to impose this additional tariff. This is because China too is a big buyer of Russian crude. This is being seen as a negotiating tactic to put pressure on India in the trade talks. When it comes to crude purchases, Indian oil PSUs have been purchasing crude oil from all over the world, and they are guided by the best market prices. Oil imports from the US have significantly gone up in the last 6 months and are up by approximately 114 to 120% this fiscal. Indian PSUs are buying oil and gas from the US companies and will continue to increase purchases. So India will look at ways to resolve the situation, keeping in mind that India shares a very close linkage with the US industry and businesses.
Okay, all right. Thanks for that, Parikshit. Well, earlier today, we spoke to a handful of experts on the impact of Trump's tariffs and the road ahead. As we slip into a short break, let's listen in to excerpts from those conversations.
So if India put out a statement along with a deal that we are grateful for to President Trump for all the help he's given us, including in the India-Pakistan war, they can put in a way that is acceptable. But, Trump feels like Pakistan recommended him for the Nobel Peace Prize and acknowledged his help, and India is not. And I am sure it is a factor. How big a factor? I mean, there are other things like big numbers that he can boast about, but it'll soothe the ego. So there is definitely an ego component to everything that Trump does.
Very surprised. As I said, I follow RFK Jr. very closely. I think they're doing a lot of reforms in the US, specifically when it comes to big pharma. And if I look at the agenda seems to be to bring, the healthcare costs down. I find it strange that it's not like you can replace generic, pharma from India to some other country, because it takes a lot of time, FDA approval. There is a host of things that is to be done. Okay. So we don't think the tariff is coming, but even if it comes...
It's been an overhang for a while.
Yeah, but I'm just saying, even if it comes, there is no replacement for that. So these drugs will go to the US. Eventually, the consumer will have to pay. Nobody has that much of, margins in India.
Welcome back. The splendid recovery in our markets continue. Now it's a good 300 points off the lows on the Nifty, while on the mid-cap index, it's about 1,000-point recovery. The Nifty is now up close to about 300 odd points, a gain of about 0.5%. So short covering very much intact. But some of the sectors which have been hit hard, a water-based, Avanti, we should just pull those up. And there are so many, the public shareholders in these companies is also quite high. For Avanti Foods, for instance, we've got about 42% of the shareholding with the retail, with the public. And for water-based, I think the number is in excess of close to about 30%. So those sectors continue to get hit very hard. Amrish Balika is now joining in on the last leg. Amrish, so much has changed in that sense. So, give us 1-2 ideas to play it, either on the way up or either in terms of exiting some of the sectors that are hit. What would you advise?
See, one of the stocks I would recommend today is Vedanta. Again, a company which has operations across various verticals like aluminium. They're the largest producers in India, nearly 45% domestic market share. Leaders in zinc, lead and silver. Oil and gas, again, they're the largest private sector oil producers. In iron and steel, if you look at, they are the largest Indian private sector exporters of iron ore. Power, more or less the second largest private player. And in copper, they have one of the largest smelters in India. And we have witnessed record production of aluminium and zinc recently. They're planning to establish a greenfield copper smelter and refinery, as well as a copper rod plant in Saudi Arabia. Another aluminium refinery and smelter is being planned at Odisha. In the recent quarters, we have seen deleveraging, which was a major issue with this group. And financial discipline has improved. In fact, the net debt has reduced by 3,100 crores in the last quarter to about 58,000 crores. And in fact, 3 global credit rating agencies have upgraded their ratings. And Q1 performance was among the strongest, highest EBITDA margin in the last 13 quarters. It's about 35%, up 81 basis points Y-on-Y. And the demerger should be through in the current calendar year. So as of now, the target price is 520 based on a consolidated EPS of 52 for FY27. But I suppose the demerged entities, the sum of parts could be higher.
Interesting. Yeah, I think the only problem is whether or not that demerger does see the light of day. That's going to be that's going to be important. Any of these numbers you track? Rate gain is what we were speaking about. The numbers look, that they have been disappointing, but the deal wins were good. Savita Oil is another stock that's up 7-8%. I think it's a play on crude oil prices bouncing up. Any of the results today that impressed you?
Rate gain, I think, is fine. Like the way I see it is, we should see the stock possibly going to levels of about 520, 530, maybe in the short to medium term.
Okay. All right. Well, Amrish, request you to stay with us. For the time being, we'll wind down on the markets. It was a dramatic day of trade. It was the weekly expiry that played out. We had the PCR that went to oversold levels. The markets were net short. And the India VIX didn't budge, even when the markets were at the low point of the day. And that's why a dramatic recovery, more than 250-point recovery from the lows of the day. The Nifty Bank as well found its form. It was up more than 600 points from the low point of the day. The resistance comes in at around 56,000 odd mark. We've been making this point, but at least the lows got defended. The tech index seems to have turned around just for this week itself. And there is that argument that the valuation discount in comparison to the Nasdaq, that's got too wide, or the premium in comparison to the Nifty, it's come to the lower end of the 10-year band. So tech, in fact, was the outperformer, was up close to 100%. What really makes you feel good is the breadth of the market, because the number of stocks advancing almost equal the number of stocks declining. 1,300 stocks were higher in today's trading session. From the Nifty pack itself,